Okay, welcome in another session by Mr. M.Patrick. With a special focus today, we want to focus on final accounts for manufacturing companies. Let us know that manufacturing companies also prepare final accounts, just like any other companies, and also like the sole proprietors. Now, you realize some firms may manufacture or produce their goods rather than to go and buy goods due to maybe saving in operational cost. So that is they see like it is cheaper to produce the goods rather than to buy them. As you can see, the sole proprietors, they do go and buy their goods and come and do the resale. But now the manufacturing companies, they do produce their goods, and after they produce their goods, now they have to send their goods in the market for selling. Good. So the aim of us preparing, coming up with the manufacturing account, one, we have to realize to know that there is a purpose of us coming up with the manufacturing account. One, we are going to report on all costs that has been incurred in producing the goods. We are going to report on all costs. We are going to report here. The purpose of us learning today the manufacturing account, we want to report on all costs that has been incurred in producing goods. Good. So that is the main aim of us learning the manufacturing accounts in today's session. We want to see what at the end of the day we'll have to come up with the cost of production. Good. So you will now go realize that we have to remind ourselves on some of the basic principles of the costing before we venture into the main format of manufacturing account. There is basic principles of costing, which I know most of us we might be aware of. We have to know what are these basic principles, and these principles we are going to interact them in the manufacturing account. So it's up to us now to learn to remind ourselves on those basic principles on costing, and then we venture into the main format of the manufacturing account. Good. One, in costing, we know the elements in costing. One, we know we have direct cost. We have direct cost. Let me talk about it first. We'll look into direct cost. You can call direct material cost. Direct material cost. You remember that now, being in manufacturing account, we are talking everything that we are going to refer here is all about materials, because we are going to produce our own goods so that we can send them in the market. So what we are going to look into more here will be referring to the materials. And everything you'll realize I'll be mentioning material will be featuring in. Good. So direct material cost, just a reminder, we say that these are costs that one can easily identify in a product, which associates in the product. You know, these are costs that you can easily identify in the final product, you know, or in the material that you have bought. You can easily tell that this one costed this amount. So they are easily identifiable in the product. Easily identified. You can easily identify in the product here. So which product now, even in the material that is used in producing that commodity, the final product, we can easily tell this one costed this. So the direct material cost, Good. We can give an example on the direct material cost. We can say, let's say for an example, we are manufacturing maybe a table. Let's say we are manufacturing a table. A table, it's before you come up with the final good table in the, maybe that you can say this is a table. One, you have to use the timber. You have to use the timber here. You know, now we are coming up with maybe a timber. You have to come up with a timber. Then we can also come up with small things here we call the nuts or the nails, small nails, you know. So here, the direct material cost, one, here that we can easily account for. Here, timber, we can refer to it as direct material cost because we can easily tell that this costed us this amount, the timber. But you realize something like nuts or nails, there are small parts that you cannot easily identify. Maybe you bought a kilo of nails, but that kilo you have used in various products to come up with. Maybe you used to prepare, maybe to come up with a chair, you have used it and now coming up with the table. But now the main part that we can identify in this product of ours, the table now, here, the table is our final product here, we can say is timber. Because timber we can tell it has costed us to come, maybe in this table we have used maybe this type of, this amount, this quantity of the furniture. So that is the direct material cost. So the cost of that costed in us in that timber, we call it direct material cost. Another thing, maybe let's say you can refer to maybe bread, wheat in bread. We can be able to account for the wheat in bread. So another example apart from this, you can say wheat in bread, because this one you can easily tell that this amount of wheat resulted us to come up with this bread. But how can you account for the spoon of maybe the sugar in that bread? You see, maybe other person used maybe 3 spoons of sugar, you know, you cannot account for that. But wheat, you are able to account for it. Let's say now also another example. We have cloth, the material that resulted you to come up with the cloth. You know, the final product, the cloth that we are wearing now. You know, the cloth here. You can account for that material, but you cannot account maybe for let's say the buttons that have been used there. They are very small. So you see, you are very small. We can call it the petty, in other words, but in financial, when we will be preparing a petty cash book, we will see how we account for the petty cash. But here, today, we are on manufacturing accounts, the manufacturing companies, that they are producing their own goods. So we are saying the direct material cost. These are material that you can easily identify in a product. And these are the examples there. Good. Another principle that we have to remind ourselves before we focus on manufacturing account is direct labor. Direct labor cost. Labor cost. Remember, as in the manufacturing account, we have to pay. We have to pay those who are working on those machines. We have to pay, at the end of the day, wages must be given out, you see. Now, why do we say direct labor cost? You know, direct labor cost. We say direct labor cost since this is the labor cost which is directly associated with that product. Something that cost, you know, I can say here is very easy. These people we are going to pay, they have directly associated themselves. They are on the ground. They are playing a major role on that ground. They are there to make sure that we see the end product. So these people these employees we are going to pay, you know, that they are on the ground. They are making sure at the end of the day we will have the final product. So we will refer to them. We refer to the cost of those who are on the ground operating the machines, you know, operating even the operators, all those people who are working on that ground, we call them the direct, we call that pay direct labor cost, the opposite of that is what? Indirect labor cost. Let me give the opposite of that. Indirect labor cost. Let's say for an example, so this one I can say directly associated. They are directly associated in producing that product. And I've said, e.g., an example for this, those operating the machines, on the ground. They are there. They are present on the ground, operating the machine on the ground there. So the cost that will, the amount of the wages that we are going to pay out, we will refer to it direct labor cost. Indirect labor cost. For an example, we can here I always use the foreman. For those who know that, the foreman, you can see this foreman will be coordinating the job while it's not on the ground. But at the end of the day, you're going to pay him or her. So what type of that cost? Because this guy is not on the ground, but at the end of the day, you are going to pay. You're going to pay this foreman because he's the one who was having the project in hand. But remember, he will only appear in the site once, you know. But there are those who are on the ground. Yes, there are those who are even, you know, doing everything from morning to the evening. This is where now they fall under direct labor cost. But there's this guy called the foreman. He's just coordinating the job, but it's very far. He will just visit the site maybe once in a while. We refer to that indirect labor cost. Indirect labor cost. Good. But we are going to look into that. Good. Another one, after direct labor cost, we have to know also there's direct expenses. Direct expenses. While we'll be producing these goods, we know we will incur direct expenses. Direct expenses cost. Direct expenses cost. Direct expenses cost. We say these are expenses which are directly incurred. We like it or not, they are directly incurred. You know, at the end of the day, we have just to incur this cost while we are producing these goods. We are producing these goods directly. They are directly associated in producing this good. Example, we can give a direct expense. We can say rent. At the end of the day, maybe you have rented that building you are doing in the manufacturing, you know. So that is an expense, direct expense, because at the end of the day, you will have to incur that expense. You have to pay for it. But indirect expense, which I'm going to show you more on this, indirect expense, we realize something like insurance, you know. We are just paying it for it maybe in a year, you see. It is just, we are just paying, but rent, we must pay for it for us to continue in producing goods. Let us now see the indirect cost. Indirect cost, we have to know that. Indirect cost. Good. So before even we proceed, we realize when we are going to okay, let me first on indirect cost, then I will mention something on that. We have indirect cost now. We have talked about the direct cost. Direct cost, which they are categorized under 3 now. So these ones were A, but one of these were direct cost. Direct cost. And we have seen into direct cost, we have seen direct material cost, direct labor cost, and direct expenses. Now let us see part B, part 2 on that. Let us see indirect cost. Indirect cost. Indirect cost. Good. Indirect cost. Indirect cost, we are saying these are costs not easily identified. These are costs not easily identified in a product. Not easily. Underline the word not. Not easily. This one we said easily. Easily identified. This one not easily identified. Identified in a product. In a product. Not easily identified in a product. Not easily identified in a product. Good. Let us start the way we started with the direct material cost. The first one will be what? Indirect. Indirect. Indirect material cost. Indirect material cost. Indirect material cost, we said these are just cost of raw materials which one cannot easily identify in a particular product. And I used an example, a very good example: salt stroke sugar. Salt stroke sugar. Salt stroke sugar in a bread. This one in bread, you cannot easily identify this because you cannot tell when you buy or when you see the final product, the bread here, it is here in our company we have produced. We cannot account for the salt or the sugar that is in that one piece of maybe bread. We cannot tell, we cannot tell we have used this. You might have used, maybe in one bread you have used 2 spoons of sugar or salt. So they are, but at the end of the day, those are you have to incur those costs, because at the end of the day, that sugar, you cannot go and pick it somewhere and just come and put, no, you have to buy it. But at the end of the day, not easily able to identify it because it is not easily identified in that product. So indirect material cost, we call example, you can have salt and sugar. Or you can say buttons in a cloth. Yeah. Can you account the buttons? Not easily. Buttons in a cloth, you see. We have said maybe bolts. I had already talked about this. Bolts in furniture. Bolts in furniture. Bolts in furniture. So those are indirect material cost. Indirect material cost. Good. What about indirect labor cost? Part B. I think I've mentioned it just to remind, to give examples. Indirect labor cost. Indirect labor cost. Indirect labor cost. What are indirect labor cost? Indirect labor cost, we have said these are labor costs which are not easily associated. You are not easily associated. They are not there. All at any given time you will pay them, but they are not easily not associated anymore. They are just communicating on the phone that let this be done, do this and do this, but they are not there. Good. And I've given an example: salary to a foreman. A salary. If you give a salary to a foreman, this we call it indirect labor cost. Indirect labor cost. Or a supervisor. You can call that or a supervisor. Because supervisor will just come there for some time, then you just go to other errands. Good. So such person, such people or such cost, we call them the indirect labor cost. Indirect labor cost. Good. We have another one which we have said direct labor cost. The opposite of that we have talked about now. Indirect labor cost. Indirect labor cost. Indirect labor cost. Indirect labor cost. Direct expenses. Sorry. Indirect expenses. This one, the last one, is the indirect expenses. Indirect expenses. We have said these are expenses that which can't be directly associated with a product. They can't be directly associated with, associated with a product. Associated with a product. You see, direct labor costs. You see, direct expense. We said something like rent. You have to pay, but this one is not directly associated. One, we have said maybe, for example, if you have, maybe you have to pay for the, we have to pay, let's say, for the indirect expenses. We can't directly associate with the product. It may be the insurance of the factory machine, because at the end of the day we have to insure our company. We have to ensure that, because at the one given point maybe we can insure it against fire, we can insure it against theft, so something like that, because that one can come and happen maybe once in a while or not to happen. So that indirect expense, we call it, we put it there. So those type of expenses we put it there. When we have our vehicles on the way, we have to insure them. So such expenses, we call them indirect expenses. Indirect expenses. But there are those expenses, as you like it or not, to replace maybe you want to replace the wheel of the vehicle. You know, that is a direct cost, and you have to. It is directly associated to that product, Good. So those were just parts which I could wish we know, so that when we go into the manufacturing account, you'll be able now to do what? To understand when we'll be mentioning such terms. So these are just elements of costing. These are just the elements of costing. So if you know them, you are good to go. So you realize at the end of the day, when you add, let's say, when you add now the direct material cost, then you come and add the direct labor cost, then you come and add the direct expenses. At the end of the day, you will have something called prime cost. So if somebody asks you what are prime cost, you just tell the person confidently, these are costs that are directly associated in a product. These are costs that are directly associated in a product, prime cost. So when we add these three, we get what? We get prime cost. Good. So not that one. Then on the prime cost, if you add now the overheads, because at the end of the day, this indirect cost, we call them factory overheads. We will call them factory overheads. So when you hear somebody mentioning factory overheads, these are just indirect expenses that are incurred in a factory or in a manufacturing company. So when you add here now the factory overheads, or another name for factory overheads, you can call them production overheads. So when you add the production overheads here, or factory overheads here, you'll get now what we call now the production cost. When we add now the prime cost, it is here, prime cost. Then you add now there the factory overheads or production overheads. Here you'll get now what we call, let me call it AA. You'll get what we call production cost. But remember, we are now going to see how we can come. This is just an overview on what we are now going to face in the manufacturing account. So we realize the direct material cost. The direct material cost is the only part that you have to pay attention, because this one you have to do some calculation for us to come with the direct material cost. But the other ones you can be provided in a question. But this one, direct material cost, pay attention, as we are now going to see how we can come up with it. So next, let us now see into the format of manufacturing account. And we have said the main purpose of us coming up with the manufacturing account is to do what? Is to report on all cost. May it be the direct cost, may it be the indirect cost. At the end of the day, we are going to report on this cost and come up with something called cost of production. Good. So let us see the format of manufacturing account. Good. So the first thing when you are dealing with the manufacturing account, the first thing I always say, emphasize on the title. You have to come up with the title, and you tell us very well which year are you in, which are you accounting for which cost of, because production is taking place from time to time. So you have to mention. So I will say manufacturing account, manufacturing account for the year ended, for the year ended. You have to mention for the year ended. Let's say the last year, let's say for the year ended 2024. For the year ended 2024. So that is the first thing you have to do. You have to mention the title. Manufacturing account, let's say maybe you are preparing Patrick Enterprise. You can mention that. Let me use my name. Let's say we are preparing now Patrick Enterprise. Patrick Enterprise. Patrick Enterprise manufacturing account for the year ended 2024. Patrick manufacturing account for the year ended 2024. Good. Then you can underline. You can underline. Good. And that is the title. And in accounts, I always insist on this. Just a title, it will earn you a mark. So let's now, we have the elements in hand now in our books. So the first thing you will start on top there is called the direct material. Direct material. As I mentioned, in an exam question, you realize direct material you won't be given. You have to go a certain process here so that you can come up, or a certain process here so that we can determine the direct material cost, the cost of raw material that we are going to incur here. So the first, then in a question you can be given opening stock, because maybe you have come from a certain period, or in the stock you have this material. So the first thing you will be provided in a question is opening stock of raw materials. Remember, in an exam scenario, you can have various stocks, but remember, they will be specific. Opening stock of raw materials. So right here, opening stock. So you'll be very keen, and an examiner can give you some of the various stocks in the exam, in the question. So you have to note, we are in the company. We are want to manufacture, and if you are manufacturing something, you have to have materials. So this is very different, separate, compared to what we were doing in the sole tradership, or the sole proprietorship, when you are preparing the income final account. But for the companies, we start with the opening stock, because opening stock of raw material. So right here, opening stock. You can add here for raw material. Good. So for me, I will have let me draw this. We can draw this. Good. So let me use 2 columns, and I can use 2 columns. Good. Let me just use 2 columns. Then I'll mention here, we have put it in shillings. Let's put there shillings. So opening stock. I'll put it my far right. So that is our opening stock. Opening stock of raw material. This is the material we have in stock. Or just in case we don't do any purchases, this is the material we are going to start from there. We are going to start our production from here. But the company might decide to go and do some purchases. So let's say for this, in our question, we have purchases of raw materials. So what will we do? We are going to add, because we have this opening stock, but we want to add another stock. So let's say we are going to add the purchases of raw material, because we have to purchase, we have to add the stock. Purchases of raw material. We have to add the stock so that we can get into the production. So purchases of raw materials, we will put it here. So let me use this one 3, then this one 2. So that is, we have purchased. So this is we had the opening stock. We have added our stock in our stock so that we can proceed with the production. But this stock, it can have some adjustment. We can have some adjustment on here. Well, remember, when you are going to buy some goods or the raw materials, there are some small costs you will incur. One, carriage inwards. In a question, if you have been given carriage inward, you have to do what? You have to add here. You have to add here. There are some costs you will incur, like carriage inward. If somebody asks you what are carriage inward, we said when we are dealing with the salt traders that these are costs that you incur while maybe you are transporting goods to the market or to the business. These are costs, like one, transport. Those transport, just paying that motorcycle. That maybe another, that is transport. Maybe the storage, maybe in the warehouse. You store the goods because of maybe time has catch you on the way and it is late. You decide, let me store the goods in this warehouse and proceed another day. That cost that you will pay for that storage, it is under carriage inwards. Carriage inward. So we add. You will add carriage inwards on these purchases. Think you're understanding. Just to take it in a scenario, good way that maybe you are operating. Somebody who is coming up bakery. In a bakery, you have to buy some maybe bells. Then on that bell, so you will buy maybe by 200 shillings. But remember, you have to put on the motorcycle. You don't have your own means. So that paying that motorcycle is under carriage inward. So we'll count it under purchases. That's why I've said there some adjustment will be here. Good. Another adjustment that can happen on the purchases of raw material, we have return outwards. Return outwards. Return outwards. Return outwards. You have come with the goods in the business or in the company, but you have realized a certain amount of goods or those raw materials, they are in excess. So you have to return back the goods to the buyer. So those goods that you are returning out, or the raw materials that are going now back, you are going to account them. You are going to subtract them from where? You are going to subtract them from the purchases. Because you are reducing, you are taking them back. Or maybe not really in excess, maybe this goods or this raw material, they are maybe they have been spoiled or they are not of good quality. You see, that question normally comes. When I said maybe I can set up question, I can ask you, state the reason under which you can return goods to the buyer or to the buyer, somebody who have sold goods to you, or from the market, or at the same time these goods can be returned to you under which circumstance? One, of poor quality, in excess, they have been destroyed. Those are the answers we expect here. So return outwards, from the word outwards, you are taking out. So we'll do subtract. But in accounts, when you are doing subtraction, you don't show by that. Just put in a bracket, we'll know you are doing what? We are subtracting. We are deducting, we are deducting. So we'll deducting that. Good. I think that is the adjustment can be made. One, the transport incurred, the expenses when you are coming, and also doing what? When maybe you are returning, just in case. Point to note, you cannot somewhere this. Not necessarily these two can be in a question. Maybe there is no carriage in it. Maybe you have used your own means. So the examiner can maybe not include this. Not that the question is wrong. No. Because maybe you have not incurred carriage inwards expense. The same thing to return outwards. Maybe you have come with the raw materials. They satisfy you. They are of what you wanted. So there will be no return outwards. So that's why I always say when you look in an exam, these two, if you don't see them, just proceed. If you have the purchases of raw material, add them direct to the opening stock and get the cost of closing stock of raw material. Good. So what next now? We have now to do what? After you do this, you get now, after you have done the adjustment, the figure you'll get here, don't indicate it here, put it here. Put that figure there. You see? If you put it there, now you add it now. You add to this. You add to the opening stock. Then you'll get your, let me use AA. AA. Let me use AA. So I can call that one as our a cost of raw materials available for use now. Cost of raw materials available for use. Cost of raw materials available for use. So that is the cost of AA, is the cost of raw materials available for use. So this is the material. AA is the material that I can now say, now take this and let us have the final product. Now I've given it to those who are operating the machines. Now they have done the production. At the end of the day, they will tell me, we have not consumed all the material you gave us. So what will I do? I will now do what? I will less. They will give me the closing stock. So we are going to less here closing stock. Closing stock. So you less closing stock of raw materials. We are going to less where? Here. In AA, in our cost. The material that were available for use. So we less there. Now you see we are now in the production. Put yourself in the production. We are now in production. Good. After we have done that, we will now get something called what? Let me call it BB now. Bravo, BB, I will call it now the direct material cost. Direct material cost. Direct material cost. So you have seen, I told you there is a procedure or a process we will have to go through so that we can arrive at direct material cost. You see, the direct material cost. So just have this format and you'll be good to go. Very easy. So this is the cost that we can say at the end of the day, this is the direct cost that we incurred in producing these goods. We can account and say this is the direct cost. But still, there are other costs we have to account for. So we are proceeding with our manufacturing account. We are still going downwards. Now, that is the direct material. The material we are going to use in running and coming up with the final product. But while we are coming up with that product, we'll also have what? To pay wages. We'll have to pay. There are those who will be operating those machines. We call that one now direct labor cost. I think by now you know that because I had to go through that. Direct labor cost, we will add here. We'll add there. Direct labor cost. Then at the end of the day, we'll also have the expenses that you cannot run away from. So direct expenses also we'll add here. So at the end of the day, if you had those, now we'll come up with something called what? Let me call it CC. We'll come with something called prime cost. Prime cost. CC, prime cost. So at the end of the day, all the direct material cost, direct labor cost, direct expense, if you put them together, we come with something called prime cost. Good. Now, after prime cost, we'll go ahead and do what? Come add there now the factory overhead or production overheads or indirect cost. We add on this prime cost, indirect cost, or you can call them factory overheads, or you can call them production cost. So we add here factory overheads, or you can call them production overheads, or you can call them indirect cost. Good. So we are going to list them here. You are going to list them down here. Good. So in a question, you can be given more than maybe 3. You can be given even more than 10, depending. So you have to know all direct, indirect cost or factory overhead cost. So we have to know them. So you can have something like maybe, let's say, let me just give few. We have maybe factory lighting. So for that reason, because they will be more than even 5 or 10, you can put them in the first bracket, in the first column. We have maybe factory lighting, factory heating, factory heating. We can also have maybe factory power. So anything, you saw, depreciation of machines, they come under this. Because those machines, as you are working with them, they are depreciating. I think that is the other lesson I wish I will show you, how we calculate for depreciation. I will come up with a session and we'll go through that. There are many methods we can calculate depreciation, but I will teach you on two. We have the reducing balance method and the straight line method. I will come up with that, upload that the same. So just subscribe to the channel and you won't miss that. So the depreciation is here also, because that one, as you are working with the machines in the factory, they are depreciating. So depreciation, all that. So you will add all those, and we put where? We add it to the prime cost. We add it to the prime cost. Good. So after that, you will have to add it here. You'll have to add it there. Good. So when we add there, we'll have now something called, you can say, name it DD. You can name it DD. That is called now cost of production. Cost of production. Good. So that is DD is the cost of production. DD is the cost of production. Good. Point to note. This factory overheads, the factory overheads, we can examiner can decide to use in percentage form or in ratio. So in case you get such question, or in the trial balance, that they have used this one, in the additional information, they have used this one like in percentage form or in the ratio form, because they can tell you factory lighting, heating to the ratio of 1, 2, 3 or 2, 3, 4, 5. Costed amount maybe 20,000. So we have to do the apportionment. I will come up with a question and you'll learn more on that. So you'll have to do the apportionment here, then, so that you can account for them, separately. So not that one. So in case you get in percentage form, just do the apportionment. Good. So we can stop here, but in a question, in case you see somewhere opening work in progress, and closing work in progress. Opening work in progress or closing work in progress. In case you see that, learners or fellow comrades, if you see in a question you have been given opening work in progress, what is opening work in progress? These are just materials, labor, overhead, which are in the process of manufacturing. You know, they are in the process of manufacturing. So we can, at the end of the day, we will have opening, that is they are in the process of manufacturing. Then at the end of the day, we will have closing. So if you have that, we cannot stop here. What we will do, we will have to do something called, this one now will become now the gross cost of production. It will not be now this, so this one will call gross cost of production, because we have to do some adjustment on it now, because there is something additional information. So in case you have that work in progress, so you'll add here work in progress. We are going to add work in progress. So work in progress. So you'll add it. You can just add it direct now. Then after that you will less closing work in progress. So this was opening work in progress. You add opening work in progress, and then you less closing work in progress from the gross cost of production. So we'll have something here now. We will call that one now. After we have done that, we will have now what we called net cost of production. Let's just call it EE, or I call it NN, so that you can know net. Okay, that one I think you know now. Net because we have done some adjustment on the gross cost of production. So you'll have now net cost of production, net cost of production, net cost of production. So that is what we will have now, EE, as our net cost of production, net cost of production. Good. So that is the figure. We can move with it to the now to the, we are going to move with that figure, that net cost of production, to the final account, to start our final account. Good. Good. Now, so we have that. Then, this net cost of production, at the end of the day, the company can decide it wants to determine their own profit. So if you see in a question that maybe you have been given a manufacturing profit, you see the manufacturing profit, just in case. Yes. So you'll have to do what? You'll have to add on that. You'll have to add on that, on the net cost of production. We'll add their manufacturing profit. That is, in case you see that. But if you not see this, if you are not given manufacturing profit, because we said we are producing goods, after we produce goods, we send to the market. Now the factory will decide, maybe it wants to do what? It wants to determine their profit. So you'll be given an equation, manufacturing account. So that manufacturing account will add on this net cost of production. But in case you are not been given the manufacturing profit, what we do, we'll have to just go in the income statement to we'll have to go in the income statement to prepare income statement now using the net cost of production. The EE figure is the one we'll move with it in the income statement. In the income statement. Good. In the income statement. Now, what do we do now? If you have been given that, so let's say just in case you have been given, so you will have to add manufacturing profit here. The company has decided to determine their profit, so you'll add manufacturing profit here. So you can add it here. Then, at the end of the day, you will have now what we call market value. You will have what we call market value. Market value. Market value. So you can call this one market value now, the final, FF. So this one now is the one you are going to move with it now to the what? You are going to know to start to prepare now income statement with it. We are going to prepare the income statement. No? The income statement. Good. So I think up to there we are good. We are good. We have learned that how we can prepare that, so that when we go now in the preparing the income statement, we'll move with this market value, just in case we have been given manufacturing profit, so that we can go and determine what? We are going now to determine if we have made the profit or we have not made we have made loss. So the aim was to determine this figure FF here, so that we can go with it in the income statement and be able to determine if the organization, after it has sent the goods now to the market, did it make the profit? You see? So this is the figure we'll move with it. That is the figure we are going to move with it. That is the figure we are going to move with it as the net cost of production. Net cost of production. So this net cost of production, this is where now we are going to do what? To move with it in the income statement. In the income statement. So I will teach you in the next part. I'll come with a practical example first. We prepare the manufacturing account until we get the net cost of production. But just in case the question I will come up with it is giving us the profit, we'll have to add profit to this and come up with the market value. And then this market value, we will treat it as our net cost of production and go with it to the income statement and come up with we determine if the company, the manufacturing company, has made a profit out of what it has produced and sent to the market, or it has made a loss. Good. So that is for today. If you have benefited from the video, you can share to others so that they can benefit, and we continue growing together in this journey of our academic journey. As I promised, I'm going to simplify accounts and to make sure anything to do with the calculation is not any hard to us. So feel free to send a comment in the comment section. If we want somewhere to be repeated in our major discussion, I can focus on it, and we'll be ready for our exams. And not only exams, but also this you can apply in wherever you are employed at the same time, in case you are running a company that you are producing maybe certain products. So for today, let me say bye bye, and may God bless you.